Hi, Ed Harrison here for Real Vision. I have the distinct pleasure of talking to the founder and publisher of Global Macro Investor, Raoul Pal. Raoul, welcome to Real Vision.
Yeah, I think I'm familiar with the platform.
Yes.
This is good because we've never done this before. So this is going to be fun and super interesting.
It will be. And, the reason that I introduced you as the founder, publisher of Global Macro Investor and told you welcome to Real Vision is because this conversation that we're having is unique for many reasons, just as you were saying. You haven't been interviewed on the Real Vision platform for a long time. And even though you're the CEO and co-founder of Real Vision, you are unique in terms of being someone who's very open and flexible to ideas. What we're presenting now is you talking in your voice as the publisher, founder of Global Macro Investor, not as dogma for what people should think about in terms of Real Vision.
Yeah, exactly. Real Vision, as we know, is an open platform for an exchange of ideas. And this is just one of these ideas. It just, I think, happens to be a very, very big one.
Oh yeah, and I'm with you on that, and this is an overdue conversation because back on April the 16th, you wrote a piece or came out, and you also had a video on the platform about the exponential age. I'm looking at this as a follow-up. So rather than you telling us what you're thinking, you're now subjected to the interview process to draw out the itty bitty details and to give any of the pushback that you need.
Do your best, because there's a lot to get across, right? This is because all they saw on the platform was just the cryptocurrency part of this whole. I alluded to the bigger perspective at the end, so we'll dig into all of it.
Well, yeah, let me tell you how I'm thinking about this in this conversation. I think the way that I would put it is we're in the last throes of the digitization of our economy, and that includes money. When people talk about crypto. But meanwhile, the existing system that we have, that we've built up over time, is basically destroying itself, loaded up on debt. And so people are migrating across to the digital universe because that's where the value is increasingly being created. That's how I'm thinking about it. And that's kind of the discussion that I want to have with you about that.
Yeah, it's that. And also the fact that I think that there are more technologies that are about to go through mass adoption phase, groundbreaking, game-changing technologies than ever before in human history. And it's all going to happen over the next 5 to 10 years. It's truly extraordinary.
Yeah, it really is. And, let's start, rather than talking about the new, let's talk about the old so that people get a fundamental view as to where we're coming from in the narrative arc here. I would start with what I would call the Japanification of the developed world, too much debt. I think that when you talk about macro and global macro, really you're putting Japan at the forefront of the trends that we're now seeing, things that happened to them after their bubble and the explosion of their bubble in the late 80s and the early 90s to the rest of the world writ large. Massive amounts of private debt and public debt on top of that. And that is creating a problem where we're all moving in the same direction as Japan. Can you put a fine point on that? How are you looking at this?
I think you're right. And I think the biggest driver is demographics, globalization, and the rise of technology. And basically what it's doing is changing the structure of economies. Alongside that, it goes back actually further. It goes back to the fact that real wages haven't really risen in the last 40 years. So why was that? That was to do really with a record number of people entering the labor force at the same time, the baby boomers. So when there's a record number of people entering the labor force, they drove up prices because they started earning money. So that was the big inflation. But they ended up driving down or holding down their own wages because there's too many of them. And then cut forward, we start the globalization process. And the globalization process with the signing of the WTO agreement meant that now a worker was competing on a global level with cheaper wages, even harder to raise wages. Then you layer in technology over the top, and you layer in the fact that suddenly 85, just in America alone, 85 million millennials have just entered the labor force. So what you've got is this problem that wages didn't increase enough